Welcome to Talker Tickers. Today, we are breaking down Sunrun's Q2 earnings report, and this one was a wild ride. It caused one of the biggest, most dramatic single-day reversals I think we've seen all year. Seriously, something fundamentally changed in how the market sees this company, like overnight. We're going to get into exactly what happened and what it means for the stock from here.
So let's just start with the headline. The day after their earnings call, Sunrun stock just exploded. It closed up over 32% in one day. A move like that, it just forces you to stop and ask, what on earth did everyone suddenly figure out?
But here is where it gets really interesting. Look at this complete 180. Right after the numbers were released, in after-hours trading, the stock was actually down almost 4%. But by the next day's close, a totally different universe. It rocketed up on insane volume. We're talking nearly 50 million shares traded. This wasn't a gradual climb. This was a violent, conviction-fueled re-rating of the stock.
And that brings us to the big question, right? What was in that earnings report? What was said on that call that turned a knee-jerk sell-off into an all-out buying frenzy? Well, it turns out the answer is a 1-2 punch of absolutely record-breaking numbers and a really powerful shift in the company's entire strategy. So first, let's just dive into the raw numbers because, wow, they were staggering. This wasn't just a small beat. Sunrun completely demolished expectations, and that's really what set the stage for this whole narrative change.
Just look at the scale of this surprise. It's kind of hard to even wrap your head around. The Wall Street consensus was for Sunrun to lose 9 cents per share. Instead, they came in and reported a profit of $1.07. That is so far beyond what anyone was modeling that it basically forced every analyst to throw out their old spreadsheets and start over.
And it wasn't just the earnings surprise. There was this number, $376 million. That's what they call contracted net value creation. You can just think of it as the total future profit they expect to make from all the new customers they signed up in this quarter alone. It was an all-time record for them, up an incredible 316% from last year, and more than double what they did last quarter. This tells you the business isn't just getting bigger, it's getting way, way more profitable. So, you might be asking, where is all that extra profit coming from? Well, a huge piece of the puzzle is this number. A record 70% of new customers are also getting a battery storage system. This storage attach rate is the absolute engine of their new strategy. See, it turns a simple solar panel system into a true energy asset that can be dispatched. What does that mean? It means instead of just making power when the sun is out, these homes can now store that energy, and Sunrun can sell it back to the grid when it's needed the most, and of course, when prices are highest. And that right there, that brings us to the real story, the bigger picture. Because these record numbers, they're really just a symptom of a much deeper change going on. The market re-rated Sunrun because the company finally and successfully reframed its entire story. They're telling the world, hey, we're not just a low-margin installer anymore, we're a high-value energy provider. This slide lays out the pivot perfectly. The old Sunrun story was all about volume. How many panels can we get on roofs? And it was a business that was constantly vulnerable to every little shift in government tax policy. The new Sunrun story, it's all about value and cash flow. They're operating a massive virtual power plant, which is just a fancy way of saying they're linking thousands of home batteries together to act like one giant power station. And that creates a real competitive advantage, a moat, that your average rooftop installer just can't compete with. And hey, don't just take my word for it. This came straight from the top. On the earnings call, CEO Mary Powell hammered this point home again and again. She explicitly defined Sunrun not as an installer, but as a power plant operator. That language matters. It's precise, it's consonant, and it's exactly what the market was waiting to hear. And you know what? They've got the numbers to back it up. This isn't just some dream for the future. It's happening right now. They control over 3 gigawatt hours of battery energy that can be sent to the grid on command. That's real utility-scale power. And their goal is to more than triple that by 2029. This is the asset base that defines the new Sunrun. Okay, so for anyone who's invested in solar for a while, there's always one big elephant in the room: policy risk. You know, the fear that a change in tax credits could wreck the whole business model. So how did Sunrun convince the market that this time is different? Well, they showed everyone they have a very, very smart plan. The key is you have to understand that there are 2 different tax credits. The one everyone worries about, the 25D credit for homeowners who buy their systems with cash or a loan, that one is going away soon. But here's the kicker.
Sunrun is pretty much insulated from that because 94% of their new customers are on a subscription model, which qualifies for a different commercial credit called the 48E. They've built their business to avoid the biggest policy cliff that's right around the corner.
And for the 48E credit, which does eventually step down, well, they outlined this brilliant strategy called safe harboring. And it's exactly what it sounds like. By using Treasury rules to their advantage, either by starting a tiny bit of physical work or spending just 5% of a future project's cost now, they can lock in the current full tax credit rate for projects years down the road. We're talking potentially all the way out to 2030. It was a masterful chess move to de-risk the business and give investors long-term visibility.
So let's put it all together. You've got record profits, you've got a powerful new identity as a distributed utility, and you've got a clear plan to navigate the policy risks. So here's our take on what comes next. Management didn't just talk a good game. They put their money where their mouth is. They significantly raised their guidance for that key profitability metric we talked about, the contracted net value creation, now expecting over $1 billion for the full year. They're telling the market this wasn't just a lucky quarter. This new level of profitability is here to stay.
So for us, based on this fundamental pivot in the business model, the way they've successfully de-risked the policy stuff, and that massive upward revision to guidance, our rating is outperform. We think the market is only just beginning to reprice Sunrun from a volatile installer to a more stable, high-growth energy tech utility.
So how could you actually trade this view? Here are a couple of plausible ideas. First, you could look at long-dated call options, maybe out to 2027. This gives you leveraged upside to this multi-year re-rating story as their virtual power plant really scales up. A second idea is a pairs trade. You'd go long Sunrun while shorting a basket of their competitors who are super dependent on that expiring 25D homeowner credit. This trade tries to isolate Sunrun's unique advantage and hedge out some of the broader market noise.
So to wrap it all up, Sunrun's quarter was a landmark event. They've successfully told a new, more compelling story. The big question now is, can they execute on this vision and fully convince the market that they're not just an installer anymore, but maybe, just maybe, the utility of the future? As always, you have to do your own homework. This is not financial advice.